What's going on, everyone? D. Anthony here with Evolution Traders. Is the Nasdaq ready to finally start rolling over? So last week we're coming off 3 consecutive red days, but one thing that I do want to point out, and if you're looking at this chart's only going back to the month of January, the start of the year. You can see that this market has a ton of more green days and upwards movement than actual down red days. Now, the red days are significant because the ranges are very big. So there's definitely opportunity to make money on these pullbacks. Again, you need to be a little bit more of an experienced trader to kind of identify that on an intraday smaller time frame so you can kind of catch those moves to the downside. But however, one thing that I do want to point out, and I'm going to kind of draw some lines on this chart in just a second here, but if you can see each time where we have, 1, 2, 3 days of consecutive pullbacks, we get the next bounce for the leg up. Now, is that always going to continue? Of course not. Could this be the time where the market continues to break down and we continue to trade at lower prices? Sure. But one thing that I do want to point out here is if you notice this last high that we put in here at the end of January, we had a little bit of a rolling top. We had a 2-day pullback into the linear regression and rising 20-day moving average, and then we got new highs. And then we pulled back for 2 days into the 20-day moving average, and then we tried to push up towards the swing high, was rejected by another 2-3 day pullback into this lower Bollinger Band and this linear regression channel. Once we bounced from here, we tested the prior swing highs, consolidated for 4 to 5 days, and then put in a new high. The next time we tested this 20-day moving average, we put in a new high. And here we are yet again testing this 20-day moving average. Now, one thing that I want you guys to be familiar with, especially when you're looking at supply and demand, you're looking at moving averages. Moving averages, of course, are always lagged. They're a lagging indicator. Again, you're not going to use these moving averages to kind of predict the future, but what you want to do is use these previous old averaged prices to kind of give you areas in zones of liquidity where if we do confirm a specific supply zone or a specific demand zone, is there potential for us to make money on a continuation of that confirmation? Now, what that means is if we do, and again, this is the only note that you're going to need to look at going into this week. Today is the 17th. It's Sunday. We're doing our chart work. Again, I hope you guys are all enjoying your weekend. If we do start to confirm Friday's lows, we have potential into what? If stocks are going to trade from supply to supply and demand to demand, then if we confirm Friday's lows, we potentially could see lower prices at around 17,832, which is this linear regression channel. Now, have we tested this channel before? Sure. We tested it all the way back here on February the 21st, where we broke through this linear regression channel, and then intraday, were bought back up and closed back over, and we've seen those new highs shortly after that. So again, if we get a 4th day continuation, again, rolling top started at 18,506. We've had 2 consecutive down days since then. If we get that 3rd, 4th red day, I would look for a deeper pullback into 17,826. Those are levels that you can play. Those are valid levels that you can look to short. Again, sit on Friday's lows, let it break Friday's lows, put in a new low, and then once that new low gets confirmed, take that short position and have the price target sitting down here. Now, again, because the bulls have been so strong for the past 3-4 months, make sure that as we're approaching this lower demand zone here that you're taking profits. Again, we're not saying that the market's pulling all the way back to 16,000. We're not saying that the market's pulling all the way back to 17,000. All we're saying is that if we do confirm Friday's lows, there's potential to make a little bit of money here into the next level of support. Now, again, once we get in down to this area, if we do get a bounce off this area and then we get another following day's candle to confirm the highs, maybe potentially we could be looking at a ride back up. And at that point in time, we'll be talking about those levels back to the long side. Now, to the upside, the bulls have a little bit of work to do here. We could gap down. Okay, here's a scenario where we could gap down heading into Monday or have an extreme washout and then quickly get a reversal right? Within the first 1 to 2 hours, where you kind of see a big gap down where you missed a short trade because it just went too fast without you. And then the day starting to bounce, and now you're hesitant about getting in long because you think that it's still going to go lower, and only to see the market just continue to slow grind up the entire day. What you can do from that point is look at the 1 hour time frame and try to find these deeper areas and these pockets where you can potentially make some money. Now, again, because the chart is a little bit broken and we are pulling back just a little bit here, we do have some work to do on the bull side of things before we get that, true open sky area. Now, again, I'm just going to make something very, very clear. The bulls really don't have any open skies until they get back over 18,300s, 18,400s, right? From there, you can see that big next push up into 18,600. Now, again, we might not gain and get up to 300 points to even see this level come into play. Does that mean that there will not be any trades this week? Of course not. You can see here, if I zoom out this chart, if we start to reclaim this 10-day moving average on a 1 hour time frame, that's this blue line here that I'm hovering over, you can see that would be breaking out of this little consolidation pattern that we've got down here. If I look at these highs of around 18,107, 18,110, kind of correlate that with the 10-day moving average, which is sitting right here, we potentially have room from 18,110 into 18,165. Now that's around 50 to 60 points worth of upside, where if we, let's say, for example, do something like this, if we get back over and close over this 10-day moving average, okay, that breaks out of this little consolidation holding pattern that we're in. What we would be looking for is a following hour candle, okay, to start confirming the high price that is closed over this level of supply. So it would look something like this. New candle opens up, pulls back a little bit, holds, and then starts to push higher. And as soon as it starts to push higher, we want to take that long position when we confirm the candle's highs that are over the 10 SMA. Then you would take profits into your next area of supply. Now, again, if this seems confusing or this seems like, this would never work, you have to sit there and you have to watch the price action. Again, trading is nothing more than risk management and confidence in your strategy and your abilities to execute in live real time. Now, if you let this candle close over and then you're second guessing yourself and then it starts to confirm and you don't get in because you think, well, maybe we're just gonna, it's this dead cat bounce before we go lower. And then you decide to finally say, hey, you know what? Well, I'm going to jump in this trade, and you're already here at this level of supply. Guess what happens? You get into the trade, you make a little money, and then it starts pulling back, and then it puts you into drawdown. And then you're wondering, what the hell is going on? Next thing you know, you're stuck in drawdown, you're getting auto liquidated, you're getting shaken out of your position, and then it starts to confirm to the downside. And then everyone starts to panic and say, well, I thought if we got over this level here, we're just going to continue higher. Yes, that's the case. Once we get over this level, we have potential to get here. That doesn't mean we're coming here. That doesn't mean we're coming here. That doesn't mean we're coming here. Although it would be very, very nice to continue to go up in a matter and fashion of that order. However, it doesn't have to happen. So all we're looking for when we're underneath supply, and what does that mean? We're underneath all of this supply, all of these moving averages, right? This is all supply. Once we're under these supply zones, all we're looking for is to paint in between the lines. Just like you were in preschool and kindergarten, we're going from here to here. We confirm 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 here to here, and then maybe come back down the other way. Very, very simple. I hope you guys enjoyed this video. Hope you guys all have a great trading week. If you guys want to trade with me, I got a little bit of a discount to join Evolution Traders. That link is down in the description box below. If you guys are looking to get funded with Apex or Top Step, those are the two firms that I trade with on the funded side of things. Those links to check them out are also down in the description box below. And I'll see all of you guys on the next video.